We've seen a huge increase in awareness of the option to invest responsibly amongst the public. That's what our consumer research is showing. We've got 88% now of Australians actually expect that their super or their investments will be invested responsibly and ethically, and 65% would invest more if their investments made a positive difference to the world.
Welcome to The Greener Way. I'm your host, Michelle Baltazar. I'm the Director of Media at FS Sustainability. We are recording on Gadigal land, and we pay our respects to the traditional custodians of country and elders past, present, and emerging. Today's guest, Estelle Parker, is the Co-Chief Executive of the Responsible Investment Association Australasia, or RIAA for short. She's been with us for a few episodes now because Responsible Investment Association Australasia, or RIAA, holds an annual conference which happens to be the largest gathering of sustainable investment professionals in the Southern Hemisphere. Last year, we were a media partner, and we're grateful that we can talk to Estelle today to just kind of have an insight of a year on, give us an update on the key initiatives that they've undertaken, and to give us a sneak peek on what to expect from their annual conference, which happens to be in Sydney this year and on the 28th of May to the 29th of May as well. So it's a 2-day conference. Estelle, thanks for joining us.
It's great to be back on the Greener Way, Michelle.
Yeah, so we're always keen to get an update, and RIAA, as everyone knows, is always at the forefront of the national debate on anything we're doing here on the sustainable policy, working with the government. So we're very grateful that we can talk about 3 key things that you've discussed last year around the time of your conference. So we'll kick off with the launch of the Sustainable Classifications Initiative. What's been the response, and what do you expect in the year ahead?
We've had a fantastic response to the initiative, Michelle. And for those who don't know, the sustainability classifications were developed following feedback that we received from our financial advisor members, where they were really keen to meet the demand from their clients for more responsible and sustainable investment products. But they wanted to be able to differentiate between these products in regards to the extent to which sustainability is a binding kind of commitment of those investment options. And so this will really help consumers make informed choices about the extent to which their values are met by the products that are on offer. So as you know, RIAA certification provides that third-party verification that financial products are true to label responsible investments. And the classifications of responsible, sustainable, and sustainable plus really enhance that transparency and highlight the consideration given to sustainability factors within each investment product. These are voluntary, they're an opt-in, and we've had a really fantastic response with really strong uptake. Every consumer is different, and financial advisors tell us that there's a wide variety of ways that consumers want to meet their values and their preferences when they are making investment decisions. And so it's been great to see, and we've even had product providers working on making kind of additional disclosures and slight changes to their investment products in order to achieve a different classification. So that's kind of a way that we are lifting standards in the market.
Well, congratulations. I think that's amazing. And I know from our readers' perspective, just having that consistency in how we talk about classifications, sustainability, there was a little bit of inconsistency in the past, shall we say. Now, second, the AI Toolkit for Human Rights. AI has been the buzzword for the last 2 years, but even now there are even more developments. So any interesting insights here that you can share?
Absolutely. As you say, sort of rewind 2 years and AI was seen as a really exciting development, and of course it's an opportunity for productivity. At the time, we saw so many use cases and markets were really excited. So we also looked at this through the perspective of human rights, and RIAA's Human Rights Working Group members really understood very early on that this also posed some uncertainty and some risk for investors, particularly in relation to climate change, but also in relation to human rights. And so it's a really complex grey area of the human rights impact of AI. And combined with that, we have this regulatory uncertainty still globally. We saw the EU introduce the EU AI Act, but there's a big question about what all of this means for investors. So as you mentioned, Michelle, 1 year ago, we released the Toolkit that was led by Lisa McDonald from Aware Super and Mark Lister. And as we've seen 1 year on, AI is still one of the key drivers of the markets and a driver of long-term returns. And the industry's exploded, but it's still a very fast-moving space, and regulation is still moving and keeps changing. But in the midst of all of this uncertainty, we have this fantastic toolkit that can still kind of point investors back to data, to how to do a regulatory risk assessment, and really practical foundations. So it helps investors understand materiality, work out engagement questions to ask their companies, and provides kind of a framework for conducting those assessments. You know, you look at some of the use cases. So we saw, for example, Meta's announcement that they were removing external fact checkers from their platform. And so you can use the toolkit to ask sort of, what does this mean from a human rights perspective? How can those investors in Meta ask the right questions relevant to this? And then link it back as well to the material impact of this. And of course, we saw advertisers responding as well. And then we've got ongoing kind of questions. What kinds of disclosures do companies like Meta need to keep showing to investors that they are implementing community standards and policies? You know, Microsoft is another one, and they've just put out their first responsible AI report. And so this toolkit can help investors kind of make sure that Microsoft's really understanding this and understand how Microsoft is mitigating those risks. So there are a lot of practical use cases for things like the toolkits that RIAA puts out. And I'm pleased to let you know as well that we'll be releasing another toolkit at this year's conference, and an update to our Human Rights and Value Chains toolkit, which has been led really competently by Mons Carlson from AusBiz, who's who's a fantastic kind of doyen of all things human rights and particularly modern slavery related. And so that's going to be another really practical update for investors on issues related to human rights in supply chains.
Now, you mentioned earlier that the Sustainable Classifications Initiative was largely driven by feedback from financial advisors, just trying to clear up some of the definitions that were a little bit in the gray area, for example. So, responsible investing for financial advisors, any update on that in terms of your program offering?
Yes, look, we have released last year at the conference as well a new course for financial advisors, which will help them talk with their clients about investing in line with their values and responsible and ethical investment options for them. You know, we've seen a huge increase in awareness of the option to invest responsibly amongst the public. That's what our consumer research is showing. We've got 88% now of Australians actually expect that their super or their investments will be invested responsibly and ethically, and 65% would invest more if their investments made a positive difference to the world. So, and financial advisors are hearing this from their clients. And we've also seen, of course, the impacts of climate change, and that's really starting to affect people's decisions, with 48% of Australians saying that recent events have prompted them to think about whether their investments are contributing to climate change or human rights. And we have many financial advisors, particularly those who are members of RIAA, that are well versed in speaking with their clients about this. But many lack confidence, you know, that they think they need to be an expert on issues like human rights or gender diversity. But really, it's just about knowing which questions to ask. So this course, it's a specialised course for Australian and New Zealand financial advisors to integrate sustainability into financial advice. So it provides 101 of responsible investment. It helps advisors gain confidence. It gives them questions to ask and provides sort of questionnaires and so on, and really helps them to help their clients navigate towards options that meet their clients' needs, including, of course, RIAA certified products.
I'd be scared to be talking about human rights unless I'm a human rights lawyer, because it is quite a complex issue to talk about, and different laws, different countries, and all of that. So it's really great to hear about that. Now let's look at what's happening globally. So you have to be hiding under a rock to try and ignore what the Trump government is doing.
Michelle, I feel like I can't get it through a conversation these days without a mention of the US president.
Yeah, because he's unwinding a lot of this, what the industry believes are great climate change policies, a big call on responsible investing and really supporting renewable energy, for example. So all of that's kind of uncertain at the moment, shall we say. So in terms of your upcoming conference on the 28th of May, will people see a discussion on this? What are the sessions that you're going to be holding then?
Great. Thank you. No, it's a really good question. And of course, there's no doubt that there's a huge amount of uncertainty at the moment. But this will not stop climate change, right? It's not going to stop the growth of the energy transition because we need to transition to reduce emissions to prevent catastrophic climate change, which, if left to go, will impact whole economies and really significant economic impacts, as well as not to mention social and physical impacts. So we require structural change. And I think you're right, like some investing will slow in the US, but I would say it's not all doom and gloom. Don't forget that during Trump's first term, US greenhouse gas emissions actually fell by over 10%, even though he had wound back a number of environmental regulations. And since then, we've seen the Inflation Reduction Act, and that's already supported a huge number of solar panels and EVs and so on to be manufactured and installed. We actually had Tom King from Nanook Asset Management write a blog for us recently, and he pointed out that even in the US, many transition-related industries are likely to thrive. So we need more energy infrastructure. We need energy other than fossil fuels and gas and so on. And there will be various energy efficiency solutions that might get a boost there. But keep in mind, the US is not the only market in the world, and the global efforts to decarbonise continue. So Europe's going strong. We've got countries in our region like India, China, South Korea, and so on that are electrifying really rapidly and adopting new technology. So, and the International Energy Agency has already said that the world now invests almost twice as much in clean energy as it does in fossil fuels. Renewables still remain the cheapest energy source. So we will be going into all of this at the conference. We'll be talking about this. Of course, there's uncertainty. It's really exciting to see that at a time when, as you know, ESG as an acronym is under the spotlight, we've actually got the person who coined the acronym coming out in person, Paul Clements-Hunt. He's on a panel with the CEO of the US Sustainable Investment Forum and conservative US studies academic Tim Lynch. So it's going to be a really interesting kind of deep dive into the future outlook for responsible investment. And we're going to cover, of course, the topic of diversity, equity and inclusion with Jennifer Hewitt, who's written about this for the Australian Financial Review. And we'll talk about as well where this all kind of leaves the energy transition, and in particular the just transition, and also where the opportunities are for Australian investors in that transition.
There's definitely plenty of reasons why everyone should book a front row seat to this conference. It feels like this is the year where we can have a true understanding of the conversation at government level from the US, for example, and what you rightly pointed out, what companies and businesses are doing. So from global to local, we've got an election coming up.
Indeed.
So are there any key issues that you're going to be talking about ahead of that, or any kind of discussion happening within RIAA about what this means?
Absolutely. And we've got we've got our conference held less than 4 weeks after the Australian election. So we will be covering this. Will the government remain committed to supporting sustainable finance and sustainable growth? Or will the private sector and investors need to take the lead? Again, we've seen a budget just delivered. Overall, we think that it's a little bit disappointing to see that the foot has been taken off the brake on sustainable finance. And the transition to net zero to some extent. There's been a modest additional funding provided to Future Made in Australia, which is great, and previously announced funding for the Clean Energy Finance Corporation, as well as closing the gap on First Nations measures. But we'd like to see a little bit more of that kind of decarbonisation ambition in the budget. So we've released a policy platform that goes through the things that we would love to see the next government take on. And it's things like, capitalising on Australia's opportunity to become a sustainability leader by really leaning into some of those global initiatives to push decarbonisation and sustainable finance. We'd like to see ongoing work on product labelling by the Australian government. Certainly, we need more certainty for markets and global investors by reinforcing net zero commitments. We need to retain the targets and also scaling up some of that investment in proven technologies. And then we've got issues that RIAA members really care about, things like economic self-determination for First Nations people and nature protection as well. I'm excited to let you know that at the conference we will have Marco Lambertini coming out. He's from the Nature Positive Initiative. He'll be doing a keynote as well as a practical workshop. And that's not to be missed because investors are far, far more interested now in understanding nature risks. And we'll be talking about, I would say that nature and biodiversity risk is the new climate. We are dependent on the services that nature provides, and investors really need to get around how they can measure and understand that.
Well said. Well, we're certainly looking forward to it. FS Sustainability is a media partner to this conference. Once again, Estelle, thank you for joining us.
It's been great speaking with you, Michelle, and I'm looking forward to seeing you at the conference.
Well, once again, Estelle, thank you for joining us. This is The Greener Way. I'm your host, Michelle Baltazar. Thank you for listening.
The Greener Way podcast is a product of FS Sustainability. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional, legal, or tax advice. Before making any financial decisions, you should read the product disclosure statement, and if necessary, consult a licensed financial professional. For more information, head to the disclaimer page on the FS Sustainability website, fssustainability.com.au.